We're here with Kessell Stelling, Chairman and CEO of Synovus Financial Corporation, and it's the day after the earnings, 37 million plus profit for the quarter, and just your general 30,000 foot thoughts on the quarter and how it went.
Yeah, just another solid quarter of progress. To see net income available to shareholders up 21%, to see loan growth when earlier in the quarter we had guided that might be more flat, to see loans up $100 million, to see good solid core deposit growth. Again, just an overall good quarter. Credit continued to trend in the right direction as our levels of non-performing loans, non-performing assets came down. So overall, pleased. A lot of work left to do, but pleased with the progress.
That's Thursday, and I guess most folks would want to know, I mean, a year of profits, and you guys they're getting higher and higher at this point. It's still a long way to go, but do you feel in your gut that that Synovus has turned the corner for good? Are you guys?
Well, we've certainly turned the corner. I mean, the day we turned profitable, there was no looking back, and so yeah, we've turned the corner, but it's a tough industry, and I think our team understands that the industry has changed. The economy is still somewhat fragile. Although there's growth, it's not robust growth. So I think every day we have to focus on taking care of customers and making sure that we hold on to our market share and grow market share in those communities where we have the opportunity to do that.
What's the biggest thing with the economy, with the industry, that needs to happen to really give you guys more momentum?
Well, I mean, a couple of things. I mean, from the economy standpoint, there's just still way too much uncertainty with our government. And I won't make a political statement. I think that it can be attributed to both sides. There's uncertainty when people are uncertain, whether it's about tax policy, about health care, about any kind of regulatory reform. They're hesitant to open up their wallets and their pocketbooks to invest. So the growth has just not been at the level that I think anybody would like to see. So it means we have to be sharper. We have to be very nimble. We have to make sure that when there is the opportunity for new business, we seize it. And then I think the regulatory environment is still very tough, and that's not blaming regulators. They just enforce the laws that are passed by Congress. But the regulatory burden on the industry now is as great as it's ever been, and more to come with qualified mortgages, again, designed to benefit the consumer. I think at the end of the day, those regs will not benefit the consumer. Make it actually tougher to get a home mortgage. So just the amount of regulation, but we can sit here and complain about it, or we can just deal with it and move on, and we've got to deal with it and move on.
Of course, the public, bankers in their eyes, don't have the greatest level of confidence in them, and so it's kind of a sign of the times a little bit.
It's a sign of the times, and I speak to it often. You know, historically, bankers were the good guys in the community. And this crisis, I think, caused a change in perception of the industry, and I think in some cases unfairly so, in some cases it was deserved. But at the end of the day, we can't feel sorry for ourselves. If you think back, historically, banking is much more about capital and loans and earnings growth. It's about human beings that made differences in communities and civic, political, social, business organizations. It's about companies that help people send kids to college, buy a home, start a business, save for retirement. And so as I talk to bankers, I talk about how we need to move back into that realm and make sure people see us that way. The excesses that you hear about on Wall Street didn't happen in Columbus, and Phoenix City, and Montgomery, and Atlanta, and LaGrange. But again, we can't feel sorry for ourselves. We've just got to take pride in what we've done historically and make sure that we, in some cases, regain the trust of our customers, but in a lot of cases just build on that trust. I think one of the really true successes of this cycle for this company was the loyalty of our customer base. We just had FDIC data released, what, Greg, a month or so ago, the recently released FDIC data shows that we still maintain top 5 market share in markets that represent about 80% of our core franchise, our core deposit franchise, which means that customers through the cycle, when they read bad things about us, heard rumors, at the end of the day, they stayed with us. And the relationships that we've maintained are really gratifying to me, and we want to make sure that we build on that trust and use that trust to continue to grow the company.
Talking about not talking politics, but the government shutdown that we've just gone through, it's a temporary reprieve on that in January. That's something that you and other bankers cringe
Yeah.
over when you see it?
Sure.
And you want a permanent solution?
Want a permanent solution, and I've shared that with political friends of mine on both sides of the aisle. And I've said that very directly to some. People wonder, well, how does it affect the bank? Well, in a day or two, does it affect the bank? No, but we've got customers that were missing paychecks, and everybody says, well, they got paid, and that sounds great, but for a week or 2 or 3, they didn't get paid, and people, when they don't have that paycheck, they've got obligations. And we told our bankers there's no way to do a blanket policy to cover that. What we said is every customer is unique, and sit with that customer and see what we can do to help them through that crisis. So yeah, it's bad on a local level, but it's bad for our country to have that type of uncertainty and just political infighting.
The psychological wear and tear.
It's just, yeah, it absolutely. I was asked by a senior politician, I won't name him, how I manage the company given that uncertainty. I said, you know what, I've just come to accept that there's uncertainty, and I don't try and run the company based on what you guys and ladies might do, because I can't make decisions based on that. Got to do it based on what we think works for our company.
And what's your biggest concern for the company itself moving forward? Is it the outside influences, or is it anything internal that you guys that concerns you?
It's more outside, but certainly the cost that this industry bears now, regulatory reform, from laws that got passed that I talked to a Treasury official a year or 2 ago, and he said to me that the Durbin Amendment, there was probably only a 60-day window in the history of Congress that something like that could have passed. But it was just so easy to beat up on the banks that a law gets passed that has taken $20, $30, $40 million of revenue just out of this company. And, you know, I still remember like it was yesterday when we announced a $100 million cut in expenses and over 1,000 jobs. And when you take $30 million of revenue out of one industry and put it into another, which is what the Durbin Amendment did, we have to adjust for it. So I worry about the external, but when I see our team, I see the way they've stuck together, and I see the way they never quit, never gave up, I'm really optimistic about what we can do on a go-forward basis.
And talking about the cuts you just mentioned, are we nearing the end of that cycle? Are you at an optimum level with the personnel and
I don't know
branches
that you
have?
ever get at an optimum level. The industry is changing. So from a branch standpoint, customers don't go to branches like they used to. It's not a Synovus trend, it's an industry trend. So you have less traffic in branches, so you need fewer of them, and you need smaller branches and not big buildings, because people don't go to the bank for everyday banking. So we will always evaluate branches for optimization. In some cases, we may decide to close 2 and build 1 because maybe there's one location that would serve a market better. From an overall employment, I think we say it often, expense management is a way of life around here. We have to continue to look for ways to get expense out of those non-customer facing areas to allow us to reinvest in those areas that do affect the customer. And I remind people, we've invested, even while we've cut expense, $95 million in 2011, another 25, 30 in 2012. Even while we've cut, we've invested heavily in new talent. So we're hiring people every day. It's just hiring people that can, again, help us grow our customer base.
Are you hiring technology people geared towards the mobile banking?
We hire technology people. We've got a very active, we're always looking for people in our technology group. We've hired people in our specialty lending areas. We just announced an equipment finance group. That was all new hires. We've added to wealth teams in Tampa, Naples, Fort Myers, Charleston. We've added large corporate banking talent in Nashville and really around our system. So we're always looking to add, but we've got to be very smart about where we spend and making sure that we control the spend so that we have money to reinvest.
Catching up on a little bit of news with you, I know, I see, and I think it was mentioned yesterday on the call or something, you guys are selling Trust One Bank branches in Memphis, and which is reducing your size there. Kind of, why is that, and is that the precursor for any more market changes?
No, it was Memphis was a geographic outlier for us. If you just look at a map, and we had low market share there. And any transaction like that takes a willing buyer and seller, and we just felt like that was a good time to do a transaction that would allow us to take that capital and invest and reinvest in areas where we had the ability to move the needle and affect our results a lot more quickly than we could in Memphis. Memphis is a great city. We had to have some great board members and team members there. But at the end of the day, we felt like we could better deploy the resources that we were devoting to Memphis in markets where we had greater market share and greater opportunity to grow.
So you don't see exiting any other markets in Tennessee?
We want to grow markets, and we are in some great markets in the Southeast. I get asked about Tennessee often, but Nashville's a great market, great town. We've got a good bank there. We're very small in Chattanooga. We think those are opportunities. Alabama is such a core part of our franchise. South Carolina, we think, is not only core but has great growth opportunities. And Georgia, again, long been the biggest part of our footprint. In Florida, our Tampa market is doing well. We've just announced the expansion into Orlando with some seasoned banking veterans in Orlando. Our Panhandle affiliates have recovered well and doing well. And then over in Jacksonville, same thing. We've got a great team on the ground there. We think we can grow there.
So the pain and suffering you experienced in Florida, that's behind you, and you guys look to move forward and expand it?
Yeah, I think so. I mean, I'll never say never, and so certainly the dramatic pain and suffering there is behind us. Markets have stabilized and moving in the other direction. Our bankers are energized. That part of the footprint, not just for Synovus, but for all banks, it was a really, really hard hit area. But we're managing the problems in large part through a centralized group now, and the bankers that are on the ground in Florida are trying to serve their customers and grow that customer base.
A quick note on Atlanta. I mean, and I know you'd done business. You'd been up there before in Augusta, I believe.
Yeah.
But how's it doing? And since it is a bellwether of the state a little bit.
Atlanta's doing well.
Is it bouncing back?
The cranes there are moving again. I was in Atlanta last Friday with Sam Hatcher, and he made the comment about they got cranes moving. I joked a couple of years ago, it probably wasn't a good joke, that when I was in Nashville, their skyline reminded me of Atlanta. The only difference was the cranes in Nashville were moving and the ones in Atlanta were rusting. Atlanta's doing well. I stay somewhat plugged in there. I'm involved with the Metro Chamber of Commerce there, with the healthcare system in Atlanta, the university system in Atlanta, the overall inflow of population and jobs. I think Atlanta will always be a big part of our franchise. It's our largest bank division, and we feel good. We feel good there.
And of course, you're always talked about as an attractive takeover target, acquisition target. And I know you said nothing's ever off the table because you got to respond to shareholders' needs and what's best for the company. But I wanted to ask, if you were on the outside looking in as another bank executive, what would make Synovus an attractive addition to your company?
Well, I think it's what makes Synovus an attractive investment. I think it's what makes Synovus a great place to work. We're in great markets in the Southeast. We have a history, as you know, 125 years. We'll celebrate later this month. We have a history of treating customers the right way. We have a history of treating our team members the right way. Even when we have to cut back, we want to make sure that's done with fairness, with transparency, with dignity. We have a very loyal customer base. we just have a vibrant company. So I think I'm flattered when people say they're an attractive takeover candidate. I'd much rather people say that than who would want to be associated with Synovus. I think, again, the legacy that was created long before I got here is one of a company that takes a lot of pride in what they do, and they do it well, which, again, makes people want to talk about it.
Is the banking, bottom line, is the banking sector overall due for a wave of consolidation coming out of the recession?
Well, maybe.
Is something's a little pent up demand there? So
well, number one, the industry is stronger, and I think that's a good thing for everybody. The industry in the state of Georgia, the Southeast, and the country, the industry is stronger. Capital levels are higher. So yeah, there's probably some consolidation due. Every banker, including me, says it just ought to be somebody else. But there might need to be some over time. But I can just speak for Synovus. I think we're a great size. We've got the capital, we've got the technology, we've got the capital markets, the specialty products that all the big banks have. But at the local level, we can deliver it like the community bank. I think it creates a niche for Synovus that is hard for others to occupy. I've got some great friends in the community banking world. They're limited by capital, by loan size, by resources that quite frankly we have here. So we've got to look like a community bank at the local level, but have the resources, again, capital, tools, technology, specialty products that really give that customer everything they can get from a super regional or national bank.